Have you noticed small and mid-cap stocks absolutely crushing it in 2025? While everyone's obsessed with big tech, these under-the-radar companies are delivering monster gains, and I'm going to tell you why. From undervalued gems to game-changing market trends, stick around for the full breakdown on why small and mid-caps are the place to be right now. And let's dive in. First things first. Let's define what we're talking about. Small-cap stocks are companies with a market capitalization, basically their total value in the stock market, between $250 million and $2 billion. Mid-cap stocks are a bit bigger, typically ranging from $2 billion to $10 billion. Compare that to large-cap stocks like Apple or Microsoft, which are worth hundreds of billions or even trillions. Small and mid-caps are often younger, faster-growing companies. They might be regional banks, innovative tech startups, or niche healthcare firms. Think companies like Flushing Financial or EVgo, names you might not hear about every day but are making big moves in 2025. These companies tend to be more agile, with more room to grow compared to their large-cap cousins, but they can also be riskier. So why are they outperforming right now? Let's unpack the 4 big reasons driving this trend. If you've been following the market, large-cap stocks, especially the Magnificent Seven, think Nvidia, Amazon, and Tesla, have been on a tear for years. But in 2025, their valuations are sky-high. The S&P 500, which is dominated by these megacaps, has a price-to-earnings ratio that's way above historical averages. Meanwhile, small and mid-cap stocks are trading at a discount. For example, according to American Century, small-cap valuations are only 2% above their 20-year average, while mid-caps are about 17% above. Compare that to large caps, which are significantly pricier. Research Affiliates notes that small caps are trading at a 40% discount compared to large and mid-caps, one of the deepest discounts since 1990. That's a huge opportunity for investors looking for value. Why does this matter? When stocks are undervalued, they have more room to grow without needing crazy earnings to justify their price. Plus, as investors start to rotate away from expensive large caps, they're pouring money into small and mid caps, driving their prices higher. It's like finding a hidden gem at a garage sale. Small and mid caps are the bargains of 2025. Next up, let's talk earnings. For the past few years, small and mid-cap stocks struggled with earnings growth, especially during high interest rate environments in 2022 and 2023. But in 2025, the tide is turning. Analysts at American Century and Wellington Management are forecasting double-digit earnings growth for small and mid-caps this year, potentially outpacing large caps, which are expected to slow down from their 30% growth in 2024 to about 20% in 2025. Why the shift? Smaller companies are more sensitive to economic changes. With the U.S. economy showing resilience, low unemployment, controlled inflation, and expected interest rate cuts from the Federal Reserve, small and mid-caps are poised to thrive. For example, sectors like financials, healthcare, and industrials, which are heavily represented in small-cap indexes like the Russell 2000, are seeing a pickup in demand. Take a company like Context Therapeutics, a small-cap healthcare stock. Its stock has soared over 30% this year thanks to investor excitement around its innovative cancer treatments. When earnings grow like this, stock prices often follow, and that's exactly what's happening in 2025. Reason number 3 is all about market rotation. For years, the stock market has been dominated by a handful of megacap tech stocks. In 2024, the top 10 stocks in the S&P 500 accounted for over half the index's gains. But in 2025, we're seeing a broadening of the market, meaning more stocks are contributing to gains, not just the big names. AllianceBernstein notes that when markets broaden, small caps historically outperform. Why? Because investors are starting to look beyond the Magnificent Seven for opportunities. The Russell 2000, a key small-cap index, has already recouped most of its losses from earlier this year and is showing signs of strength. Posts on X are buzzing with optimism, with analysts like @Advisor Analyst pointing out that small caps are trading at multi-year valuation lows, making them ripe for a comeback. Plus, mid-caps are in a sweet spot. Invesco reports that mid-caps have outperformed both small and large caps since 1991, with an annualized return of 11%. They offer a balance of growth potential and stability, making them attractive as investors shift away from overpriced large caps. This rotation is a big reason why small and mid-caps are shining in 2025. Finally, let's talk about policy and economic tailwinds. The U.S. economy in 2025 is in a unique spot. Despite early fears of a recession due to tariffs announced by President Trump, the economy is holding strong. Policies like deregulation and potential corporate tax cuts are creating a favorable environment for smaller companies, which are often more domestically focused. For example, Business Insider highlights that Trump's America First policies are boosting small caps, as nearly 80% of Russell 2000 companies derive their revenue from the U.S. This makes them less exposed to global trade disruptions compared to large caps with international operations. Plus, an uptick in IPOs and mergers and acquisitions is bringing fresh opportunities to the small cap space. Companies going public or getting acquired often see their stock prices soar, and 2025 is seeing a surge in this activity. Lower interest rates are another big win. Small caps rely more on borrowing than large caps, so when the Fed cuts rates, as traders expect by mid-2025, it reduces borrowing costs and fuels growth. Kane Anderson Rudnick points out that small caps have historically outperformed after the first rate cut, and we're seeing that play out now. Now, before you go all in on small and mid caps, let's talk risks. These stocks can be more volatile than large caps. Earlier this year, the Russell 2000 dipped into bear market territory, down 22.5% from its high, thanks to tariff fears and economic uncertainty. Smaller companies are also more sensitive to economic downturns, as they often have less financial flexibility. Valuations, while attractive compared to large caps, are still above historical averages in some cases, so you need to be selective. Focus on high-quality companies with strong earnings like those with high return on equity, as AllianceBernstein suggests. And don't forget about active management. Funds that pick the best small and mid-cap stocks have outperformed their benchmarks during market dips, according to Value Research. There you have it. 4 big reasons why small and mid-cap stocks are outperforming in 2025. Attractive valuations, accelerating earnings, market rotation, and policy tailwinds. While there are risks, the potential rewards are huge for investors who do their homework. The market is telling us it's time to look beyond big tech and into the smaller companies driving America's growth. Anyways, that's all from our side. I'll meet you next time. Until then, happy investing.